Get ready for the biggest market moves of the day. We start with the incredible shift happening at Alphabet. Learn how Alphabet has transformed from an AI zero to an AI hero in less than a year, with investors cheering the Gemini adoption and accelerating cloud growth in 2026. We break down exactly how Alphabet is translating that massive AI spending into real revenue lines across its cloud, silicon, and consumer devices, showing you the crucial pivot in the AI investment cycle.
Stop using your finger for notes, sketches, and edits. This Jam Jake stylus pen gives your iPad a smoother, more precise writing feel with palm rejection so your hand can rest naturally on the screen. It charges fast, works for hours, and comes with replacement tips. Perfect for school, work, or creative projects. Check the link in the comments to grab it on Amazon.
Next up, we look at the intense competition in the Silicon War. We're diving deep into how Broadcom is positioning itself as the second pillar of the AI silicon trade, guiding to a custom AI chip opportunity worth roughly $100 billion across its top hyperscaler customers. This is a game changer, showing how custom silicon is capturing spending even as the market diversifies its chip strategy. Now, we tackle the titan of the hardware space. We examine the ongoing story surrounding Nvidia. We'll explore what CEO Jensen Huang is telling the next generation of AI careers, and why, despite the market shifts, Nvidia remains the anchor of the AI hardware trade, even as analysts point to emerging competitors making new highs. We look at the insider activity and the upcoming earnings report that everyone is watching. And finally, we confront the big question: can Alphabet actually pass Nvidia as the world's most valuable company? We compare the market caps and analyze the massive surge in Alphabet's cloud AI revenue against Nvidia's trajectory. Don't miss this critical analysis of the entire AI value chain. Stay locked in because we have all the insights you need to navigate this market, so hit that subscribe button now. Noi dung kai tight. The AI megacycle has intensified, moving decisively into earnings territory as recent reports have spurred a significant rally across Alphabet, Nvidia, and Broadcom. Investors are pivoting from speculative narratives to tangible metrics, focusing instead on contract details, custom chip pipelines, and the surging hardware demand driven by AI agents. And this shift signifies a crucial transition. Big tech is now effectively converting substantial AI spending into measurable revenue streams across cloud services, custom silicon, and consumer devices. This indicates that capital expenditure commitments are translating directly into earnings power, rather than remaining purely forward-looking projections. And Alphabet has undergone a dramatic transformation, evolving from being labeled an AI zero to an AI hero in under a year, according to a recent Bloomberg newsletter. Investor enthusiasm is fueled by the successful adoption of Gemini, resilient search performance, and accelerating growth in Google Cloud projected for 2026. Consequently, Alphabet's share price has rebounded as the company successfully monetizes its AI products, easing concerns over search advertising and narrowing the gap with rivals like Oz and Azure in the cloud sector. And Broadcom is emerging as the second critical pillar in the AI silicon landscape, positioned alongside Nvidia. Management at Broadcom is guiding the market toward a substantial custom AI chip opportunity, valued at approximately $100 billion across its three major hyperscaler clients. This custom silicon strategy directly challenges general-purpose GPUs in inference-heavy workloads, allowing Broadcom to capture spending even as hyperscalers diversify their chip sourcing. And while Nvidia remains the undisputed anchor of the AI hardware trade, CEO Jensen Huang has emphasized that compute demand is still in its early stages, framing AI as the defining technology shift of the generation. He stressed that compute demand is not yet peaking. Meanwhile, the AI investment cycle is expanding into consumer hardware, with Apple becoming an unexpected beneficiary. Reports indicate that AI agents powered by Anthropic's Claude are driving record demand for Mac Mini units, as developers and small teams utilize them as cost-efficient local hosts for AI workloads, offering Apple insight into the AI capex cycle. \n for investors. The takeaway is that AI demand is flowing through multiple layers of the technology stack simultaneously. Cloud platforms, custom silicon providers, GPU vendors, and consumer device makers. While risks persist, including stretched valuations and uncertainty regarding 2027 capex visibility, the consensus suggests that diversified exposure across these key areas, cloud, silicon, and adjacent hardware, is essential to mitigate single-stock risk while maintaining alignment with the overarching AI theme. Nvidia's dominance in the AI chip market is facing increasing scrutiny, with analysts suggesting Alphabet could surpass it as the world's most valuable company. Alphabet's market capitalization currently exceeds $4.8 trillion, compared to Nvidia's $5.2 trillion. While Nvidia's stock has seen a 16% increase this year, Alphabet's has risen by 26%, signaling the strength of Alphabet's diversified, highly profitable business portfolio. Alphabet is positioning itself strongly within the AI ecosystem. Its Gemini model is actively challenging OpenAI in both personal and enterprise applications, with download figures reportedly closing the gap with ChatGPT. A key advantage for Gemini is its deep integration into Google's massive distribution system, leveraging 14 billion daily Google searches and 1.8 billion active Gmail accounts. Alphabet holds a significant position across the AI landscape. According to Luke O'Neill, Chief Investment Officer at Cookson Pearce Wealth Management, the combination of Alphabet's offerings places it in a prime position to be the biggest AI winner. Furthermore, Google's core businesses, including its search engine, the world's largest, and YouTube, provide substantial revenue streams. Despite Nvidia's leadership in AI chips, competition is intensifying. Companies like AMD, Alphabet, Microsoft, Amazon, and Meta, alongside Broadcom, are actively vying for market share in the sector. AMD's stock has surged 112% this year, highlighting growing investor interest in alternatives. Skepticism surrounding Nvidia's near-term trajectory stems from several factors. Analysts note a fundamental gap between projected hyperscaler capital expenditure growth of roughly 10% and CEO Jensen Huang's guidance of a 40% trajectory. Additionally, potential slowdowns in AI data center growth due to accessibility constraints like electricity and water, coupled with geopolitical restrictions preventing Nvidia from selling its most advanced chips to China, are posing risks to its growth outlook. Alphabet, Google's parent company, is closing the gap with Nvidia for the title of the world's largest company, with less than $200 billion separating the two tech giants in market capitalization. Nvidia currently leads with an estimated market cap of $4.79 trillion, while Alphabet sits at approximately $4.67 trillion. The primary driver behind Alphabet's ascent is its surging artificial intelligence revenue. Google Cloud revenue experienced a significant 63% year-over-year jump, reaching $20 billion, demonstrating that Alphabet is actively monetizing its AI capabilities. This performance contrasts with Nvidia, whose valuation has seen a pullback from its $5.2 trillion peak, with its stock climbing only 7% year-to-date, compared to Alphabet's 24% gain. Alphabet has recently entered the $3 trillion club, a milestone achieved roughly a year after Nvidia surpassed it in February 2024. Research firm MoffettNathanson suggests that Alphabet's market leadership and diversification across its business lines, including search and advertising, position it as the most valuable company in the world, a profile a pure-play chipmaker cannot replicate. This narrowing gap is interpreted as a structural shift in how the market is valuing the AI value chain. Alphabet's rapid acceleration in cloud revenue signals strong growth, underpinned by diversified revenue streams. Analysts warn that if Nvidia's upcoming earnings disappoint, Alphabet could potentially close the remaining gap in a single trading session, underscoring the high stakes in the current market repricing of AI assets. Nvidia's dominance in the AI sector is facing increasing pressure as semiconductor peers gain momentum. Following a strong year, the chip giant experienced a slight pullback, dropping 0.7% to $213.64 in pre-market trading on Monday, closing Friday just under its record high of $216.61. Year-to-date, Nvidia has seen a 15% increase. However, analysts suggest a shift in market focus. Independent analyst Richard Windsor noted that the gold-plated investment in AI is now stagnating, while competitors like Intel and AMD are making new highs daily, driven by excitement over their central processing units for AI inference workloads. Market attention is reportedly shifting away from chip supply bottlenecks toward electricity supply and CPUs. Institutional interest remains significant, with 65.27% of Nvidia stock held by institutional investors and hedge funds. Despite some portfolio adjustments, the company remains a major holding for funds like Warm Springs Advisors. The analyst consensus on Nvidia remains positive, with 48 analysts rating it a buy and 4 assigning a strong buy, maintaining an average price target of $275.25, with some firms setting targets as high as $300. Nvidia recently delivered strong results, with its last earnings report in February beating expectations on both the top and bottom lines, posting an EPS of $1.62 against a consensus of $1.54 and revenue of $68.13 billion against estimates of $65.56 billion, marking a 73.2% year-over-year revenue increase. Goldman Sachs reportedly reiterated a buy rating ahead of the upcoming earnings report scheduled for May 20, which is the key event for traders. While the company continues to deepen its infrastructure control through partnerships with firms like Corning and IREN, insider activity shows some selling, with Director John Dabiri and EVP Ajay K. Puri selling significant volumes over the past 3 months. The market capitalization for Nvidia stands at $5.23 trillion, currently trading near its 50-day moving average of $187.59. The evolving competitive landscape suggests that investors should monitor CPU performance and broader supply chain factors as the AI investment cycle matures.